Hey, welcome back to another episode of the She's Making an Impact podcast. I'm your host, Rachel Ngom, and we're talking numbers. We're talking sexy numbers. Numbers are sexy. And we need to know our numbers and think of them in a fun way as we are growing our business. So we're going to be talking about the top 3 financial freedom hacks you should be doing now, but we talk about a lot more than just that. I'm bringing on Danielle Hayden. She is a reformed corporate CFO, Chief Financial Officer. She's on a mission to help rule-breaking female entrepreneurs understand their numbers so they can gain the confidence needed to create sustainable profits. That's one of the big things we're talking about. How can you create a more profitable business? Know your numbers, looking at your KPIs. When are you ready to hire? How much should you be paying yourself? When are you ready for a raise? All kinds of things that are really, 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 really important. So if you have a business bestie, share this episode with them because I'm pretty much guarantee you that they need it too. So share this and then let's dive into the episode. Hey, Danielle, welcome to the show.
Thank you so much for having me. I'm excited to be here.
Yes. So let's start off. Tell us a little bit about you and what you do.
Yeah. So a little bit about me. We were just talking about before we hit record. I am in the very cloudy Cleveland, Ohio area. I consider myself to be a mama from the Midwest, and I own a company called Kickstart Accounting, Inc. My passion is my team's passion. I can't even say my passion. My team and I's passion is to help business owners understand their numbers so that they can make better business decisions. When we started the firm, we thought we could consult people on making better business decisions, right? Like that was the entire premise. However, we realized that most business owners don't have solid, accurate bookkeeping in place. So we pivoted like every business has to do at some stage in their life. And so we provide bookkeeping for business owners, which then enables them to be able to use the information in their business. So I just believe entrepreneurs have the opportunity to change the world and make a real impact in the economy. And I'm just here to play my part in that.
Yeah, which we can't do if we're not looking at our numbers and making sure we're growing correctly.
Yeah, it's like, seriously, it's the heart of your business. It is the lifeline. It is everything. I always say it's the most, well, it's like sales and then and then your cash, right? Your financials. Yeah. And unfortunately, look, I recognize that we have a lot of money stories and shame and difficulty around this topic. And so I don't want it to sound like I'm coming on here saying, this is easy. It's the most important thing you should do. Make it happen. I also recognize that we all come into entrepreneurship with a money story. How our parents or grandparents talked about money, our fears and doubt. And so I understand that this can be a shameful topic. It can be a difficult topic. And for most of our clients that work with us, usually the first thing they say to us is, oh my God, I can't even believe I'm here. Like, this is so hard. And I get it.
It is. I think a lot of times as entrepreneurs, we're more so like the big picture visionary. And so we don't like to think about the little details, and like bookkeeping requires you to be more detail oriented and looking at all of that stuff. And so it's like, nope, not going to look at it. Hiring a bookkeeper was such a huge game changer when we started doing that. A couple months into our business, I was like, yes, we need this.
Yeah.
So how can we use our numbers to actually grow and scale our businesses?
So I believe in the power of measuring your numbers over time. So I truly believe that what gets measured gets managed, and being able to measure that over time and then be able to make changes in your business. So I'm not saying that by knowing your numbers, you're going to magically all of a sudden double your revenue and bursting through the seams with clients, right? It's different than marketing, right? It's a very different, it's a different tactic. It's a different business strategy when it comes to looking at your numbers. So what is required to have this help you scale your business is, step one is to do the bookkeeping, right? To have a record keeping system or a team in place who's recording the records for you. And then having a set of financial metrics that you're looking at on a regular basis. And then the most important piece is looking at the numbers, right? It's actually looking at the numbers and learning from them and taking action from them. And whether you do that on your own as the CEO or use your bookkeeping team, your money team as your accountability partner, but it's that third step that's actually going to power you to be able to use the information to scale.
What are some things we should be looking for?
So, in terms of scaling, what should you be looking for? So, I call it the 7 drivers. So there's 7 drivers to business. There's our pricing. So it is understanding how we are priced in order to be able to not just have a profit, but be able to actually achieve our goals. And I think all goals should be set by determining what's the profit that I want to make, how much money in debt do I want to pay down this year, and how much do I want to take as owner's draws. That's your real break-even point. And so being able to price your services at the true break-even point so that you can meet all of your goals. The second driver is volume. So how much you need to sell in order to be able to hit those goals. So do I want to have the high ticket price items and sell less of them, or do I need to sell more? So just the volume. So how does that volume drive your business? And then there's all the costs, right? So we have 2 main cost centers in our business. We have our cost of goods sold or direct labor costs. So this is the price that you pay for materials or direct labor in order to service your clients. And so looking at that information, if you can reduce the price you pay by 1% and increase your price by 1%, you've now moved the needle by 2%, right? So you are now making a profit by 2% just by decreasing your costs and increasing your price. I'm not saying by 10%, I'm not saying by 20%, by 1%, you're increasing your price or you're increasing your profit. The second expense driver is your operating expenses. So where are you spending money in your business? So this includes Zoom, your CRM, your email marketing system, your paid ads, everything else that goes into driving your business, to operating the back end of your business. So again, imagine if you reduce those operating expenses by 1%, right? We're already moving that needle so far by making small changes over time. And then the next 3 are a little bit dependent on your business, but accounts receivable, I know it's an accounting term, but who owes you money? So accounts receivable is who owes you money. If you can collect that money 1% faster, right? So whether that be collecting credit cards at the beginning of an engagement, it might be shortening your payment terms, giving value to customers who pay their bills quicker, whatever it may be, but getting paid faster. Accounts payable, I know another accounting term, sorry, but who you owe money to. So how can you slow down the payments that go out to your creditors? So this could be simple as contractors, vendors, paying for things on a credit card so you have a 30-day float, but how can you slow down cash moving out of your business, right? So again, imagine just paying that 1% slower. Again, right? Small changes make a huge difference. And then inventory, this can be both the amount of stock that you have on hand or employee utilization, depending on if you have any inventory. But another one to keep in mind and monitor as you move forward. So there's 7 very key metrics that you should be reviewing on. I prefer a monthly basis, but a minimum quarterly, that these are going to be the drivers of your business.
Awesome. Okay. So we look at those 7 things every single month. Every
Mhm.
single month.
Yeah.
Okay. I love that. How would you budget through a business model pivot? Because a lot of us have had to pivot with COVID and all the things that came with that. So how would you budget going through something like that?
Um, so there's a few things to think about when you start to think about pivoting. Are you pivoting to add additional revenue and additional expenses onto your business, or are you pivoting to actually leave behind what you were doing in the past? If you are leaving behind what you were doing in the past, I want to go over a much more detailed forecast, a detailed projection, a detailed plan in order for you to be able to make that pivot. So this can, when we do this with our clients, so we do this on a regular basis with our clients, where we'll sit down and say, all right, where do we see ourselves going over the next 12 months? What is the marketing plan? How many new clients? What's the price point? And then what are the operating expenses that are entailed in going into this new pivot? And then there's the straight strategy behind it. So there's time, like how quickly do you have the energy to make the pivot? So, not everything in accounting has to be quantifiable, right? We can also think of accounting and money as energy. And so, when we think about budgeting, I want you to think about the revenue and the expenses, but I also want you to think about your time and energy. And again, this is especially important if you're adding additional revenue stream and additional expenses. You need to make sure that you have enough energy and time in order to be able to support both as you pivot.
Got it. Okay. When you're investing in a team, what are some KPIs that we should be tracking?
Yeah. So when you're investing in your team, um, there's a few things you can start to think about. If this is your first hire, it is a little bit different than subsequent hires. Your first hire, you're thinking about things like how much money does it cost to register in the state in which you're going to be paying that employee. You're thinking about how much is it going to be to pay your payroll provider? So internally at Kickstart Accounting, we use a company called Gusto. So how much is it going to cost in order to be able to run the payroll with that payroll system? And then what is going to be the ongoing costs? I'm going to back up for 1 second. So before you actually bring them on board, there's also the background check, credit checks, the actual posting of the position. So you have to remember when you're starting to budget and think about hiring your first employee on. I actually have a whole worksheet on this that I'll send to you to include in the show notes. That is a really good exercise for anybody who's thinking about making their first hire or subsequent hire to really just put together a budget. So, are you going to be sending them any equipment? So, laptops, anything, monitors, and then what systems are they going to need to be set up on? This is one that when we work with our clients, they're like, "Oh, I never thought about how much it costs me to add on a user for every system that I have in place." And then what are the ongoing costs? So how much is it going to be to pay them on a hourly basis? Any additional training? Are you going to be offering them benefits, PTO time? And then another one that our clients are always surprised when they forget is the cost of culture, right? So team meetings, meeting with you, maybe just sending them a birthday card or a birthday gift, anniversary gift, Christmas cards. So, what is that cost of culture for each employee? And then once that employee has been onboarded, there's a lot of KPIs that you can measure on a regular basis. There's employee utilization. So how much time is available for each employee versus how much time is actually being utilized. Schedule variance. So, the time that you plan or that you budget for each client or event versus how much time is actually being spent. Um, and then, revenue by employee. So how much revenue, not that each employee is bringing in revenue, but how much revenue, how much of your client base are they able to serve? And then another accounting term, sorry here, overhead rate. So this is one where the things that you don't think about, like the systems, they can really start to become your overhead rate that can be allocated to all clients.
Got it. Okay, so obviously when we're in business, we want to be profitable and be paying ourselves. How do we know how much we can be paying ourselves and when we're ready to give ourselves a raise?
Oh, yeah. This is like the $1,000,000 question. um, so it really depends on you as the business owner. So there's a few things here. There's your risk tolerance as a business owner. So I like for every business owner to have between 1 and 3 months worth of operating expenses in their checking account. So I don't think that we should be taking owners' distributions or bonusing ourselves or giving ourselves a raise until we have that cushion behind us or in our bank account. So once we have that cushion set aside, we can start to think about what is appropriate for me as a business owner. You should definitely be talking to your money team, so your CPA, your bookkeeper, about becoming an S corp and whether or not you should be on payroll versus taking an owner's draw. But generally, on the low side, we like to see at the very low side, we'd like to see 15% of your sales going to payroll, and on the high side, absolutely no more than 65%. That's a huge range. I know it is. So that's why I say it depends on your risk tolerance as a business owner. We have some clients who say to us, I don't, I don't want to take money out of the bank. I want to make sure that I have money in the business to be able to reinvest. I'm in growth mode, so I need to make sure I have access to that cash and that capital when I want to access it. And so they tend to pay themselves less. If you're an established business who, your engine's running and rolling and raring to go, you can start to increase your pay as an owner because you're not regularly reinvesting into the growth of the business.
Got it. Do you follow any profit first models?
So I love Profit First. I support Mike McAllowitz. I think it's a great strategy. However, what we find with most of our clients who are using Profit First is that they get very frustrated with themselves because they can't hit the high percentages that he has laid out. So, if you are going to follow a system like Profit First, I just encourage you to find the right percentages for you and the stage business that you're in.
Okay. What would that look like if you're in like the first 3 years of business, let's say?
I would definitely say that you're not going to be at I think he says 50% in the book. I would say you're probably on the low side if you're even taking money home from your business. So year one, you're probably actually not taking home much from your business. We see a lot of our clients in the first year, they're reinvesting in really building the back end of their business, websites and systems and growth and training and conferences, advertising. So year 1, 2, you're really double downing on the growth of your business. And then you can start taking owner's draws that feel appropriate. And so you're probably more like that 15% range that I mentioned before.
Got it. I feel like that might be a slippery slope though, if you're not paying yourself and telling yourself the story of like when we reach this level, or because then you're always going to find something that you could invest in to grow the business, right?
Yeah, it can be a slippery slope. However, there's two sides to the story, right? So we have
Totally.
other business owners who will say to us, I was told I have to pay myself from day one. And then they're taking money out of the business and they're not able to pay their bills. And it's actually creating a really stressful situation for them. And they don't necessarily need the funds personally. So it depends. I hate using the word it depends, but it depends. It really does. And that's why I suggest that everybody has a money team. Call it your money team for a reason, because that needs to be the people who can talk to you about your specific situation. If your spouse just got laid off and you're starting a business as well, your situation is going to be very different. I would suggest you're doing less training, less investing, and more taking home a role in your personal life. However, I just was talking to a client this morning who she's in year 2 of her business. She really wants to recommit, not that she wasn't committed in year 1, but she really feels like she can invest more in the growth. So she's looking at actually bringing on some consultants and doing some paid ads and looking into the advertising piece of her business. And thankfully for her husband, they sat down and they did their personal budget, and they're able to pay their personal expenses out of his salary. And so she's been allotted, right, thoughtfully budgeted for this growth strategy for this year. And I believe in seasons of our business. So it's okay to have a season of growth, but if you're always in a season of growth, we have to be able to check ourselves as well.
For sure.
I hear you on that.
For sure. So you mentioned the money team. Who should be on that money team?
Yeah. So I believe everybody should have a triangle in their corner. So we have our bookkeeping team, our CPA or tax accountant, and then a financial advisor. Your tax account should not, and I will repeat, should not be the same company or person as your bookkeeper. They really need to be 2 different people so that there is a checks and balance in place that can protect you as the business owner. And then your financial advisor. These people can be associated so that they are talking to each other and they're on the same page, but you don't want them on the same team.
Makes sense. Okay. So it's tax season around that time. What are some tax saving strategies that we can implement?
Yeah. So first and foremost is keeping your business and your personal separate. So a lot of commingling goes on in business, and we want you to be protected from the IRS more than anything, and to make sure that you don't that you're not audited. But I also don't want you to go the other direction. So we have some of our clients who will say, I'm not sure what's a business expense, so I put like nothing in my business account. And I'm like, oh, you're missing out on it so much, right? Are you using your cell phone for business? Are you taking the home office deduction if you're working from home? If you are taking a potential vendor out to dinner, are you expensing that? So really, if it is for business, really making sure that you're taking that that cash withdrawal from your business checking account, and not being afraid of the IRS, right? There's a healthy fear, right? But not being so afraid of the IRS that we don't actually use our business in the right way.
Okay, I have more of like a nitty gritty kind of fun question. So like we do photo shoots for our business, right?
Mm-hmm.
Like a lot of us do. Can you expense getting like your hair, your nails, and clothes for photo shoots?
Yeah, absolutely. If it's for the photo shoot, yeah. If it's
okay, cool.
If it's like 6 weeks before the photo shoot, you're getting nails done, probably not. But if it's like, it is for the photo shoot, absolutely. And the other thing I'll say is, talk to your tax accountant. They are the person that's putting their CPA license on the line. And so our tax partner is comfortable with that. So you want to talk to your CPA to make sure that they're comfortable.
Got it. Any other financial freedom hacks that you want to share with us?
Yeah, the biggest financial freedom hack that I can think of is, I don't want to use the word knowing your numbers, because that's not enough. It is being able to look at the numbers as a CEO. So sometimes when I say know your numbers, people say, well, yeah, I'm in QuickBooks. I update my transactions every week. No. That's not what I mean. Your bookkeeper should be doing that. You as the business owner should have a clear set of numbers that you're looking at on a regular basis, for at a high level with a clear head, with the intention of, what are these numbers telling me? And what do I need to change? What do I need to pivot in order to be able to reach my goals as a business owner and then take that action?
Got it. What's one of the best books you've read?
I say it all the time, Built to Sell, absolutely changed
Yes.
my life. I love that book and I suggest it to everybody.
That's a really good one. Really easy one too.
Yeah. Oh yeah. Like I think I read it in a weekend.
Yeah. What does it mean to you to make an impact?
I think I'm making an impact every day that I wake up and get to do this right here. Right. So I know how overwhelming look, running a business is overwhelming. It can be. I always say life is hard. Entrepreneurship is hard. This money piece, I know how hard it can be. And so for me, I just want to help make this one topic a little less overwhelming for people so that we can all step up into our purpose.
Yes. Well, where can we connect with you?
KickstartAccountingInc.com is our website. Hanging out on Instagram quite a bit, Kickstart Accounting. But if you'd like to connect with us directly, go to kickstartaccountinginc.com/book a call and talk to the accounting team yourself to talk about your specific situation.
Amazing. Danielle, this has been awesome. Thank you so much for being here.
Yeah, thank you. I appreciate it.